Modern retail and luxury goods do not simply appear on store shelves. They navigate a massive, hyper-complex web of physical logistics, crossing oceans and continents in thousands of shipping containers every single day. And quietly, behind the scenes, an invisible digital ledger is tracking that movement for some of the biggest corporate names on Earth. We are talking about active integrations with BMW, Walmart China, Louis Vuitton, and the UFC. Yet the native asset powering that global logistics network is currently trading a staggering 98% below its all-time high. It exposes a harsh truth about the modern crypto ecosystem. Having genuine integrated corporate utility does not automatically guarantee investor attention. While retail traders chase dog coins and speculative hype cycles, the corporate world requires strict data verification and rigid performance. That is the exact gap VeChain fills. It is a dedicated Layer 1 network engineered specifically to handle massive streams of enterprise data, authenticating luxury products, and tracking carbon emissions across supply chains. This network has been battle-tested since its launch in 2015. It was actually built by Sunny Liu, the former chief information officer for Louis Vuitton China. Every piece of its architectural DNA is tailored to pass the compliance checks of a traditional corporate boardroom, rather than appease a frantic retail trading market. To process that kind of corporate transaction volume at scale, a network needs a mechanical separation between who owns the system and what fuels it. At the center is VET, the primary asset granting an ownership stake. Holding that automatically generates VTHO, the network's literal gas. This fuel pays for blockchain data transfers. When a partner executes a contract, they use VTHO. Once cleared, those gas tokens are permanently destroyed. As enterprise adoption scales up, the burn rate of the gas token naturally accelerates. It creates a closed-loop mechanical supply pressure that the broader market has so far entirely overlooked. To understand why the token sits at its current valuation, we have to look at the absolute limits of the system. VeChain operates with a hard, immutable cap of 86.7 billion tokens, and right now almost all of those tokens are already circulating in the open market. This vertical bar chart puts the scale in perspective. VeChain is currently sitting at a total market capitalization of roughly $455 million, which is a tiny fraction of its multi-billion-dollar historical peak. Because the supply is fully diluted, there are no massive future token unlocks waiting in the wings to flood the network. The low valuation we are seeing today is purely a symptom of poor market sentiment, rather than structural inflation. So we have a pristine mechanical design, strong corporate backing, and a fully circulating supply. But then you look at the trading data. Looking at this historical price chart, VeChain hit an all-time high of 28 cents in April of 2021. Since then, it has plummeted off a cliff, dragging along the bottom at roughly half a cent. Operating at this fractional penny tier introduces risks. Liquidity thins out, making movements highly volatile. For momentum to return, the asset must clear a specific hurdle. It needs to break technical resistance at exactly 1 cent, acting as a heavy ceiling on price action. Signing multinational corporate partners year after year has clearly proven ineffective at moving the needle organically. If news announcements will not move the chart, the network needs a structural software catalyst. That catalyst is arriving in the form of the upcoming Renaissance upgrade, which promises to deliver full EVM compatibility to the network. By becoming Ethereum virtual machine compatible, VeChain suddenly speaks the same programming language as the largest decentralized finance ecosystem in the world. It allows external developers to easily port their existing applications over without writing entirely new code. Opening the gates to Ethereum developers could be the exact jolt required to turn an isolated corporate ledger into an interconnected Web3 ecosystem. VeChain has already achieved the kind of real-world integration that thousands of other crypto projects only write white papers about. But holding it means committing to a perpetual waiting game. If you have the patience to see how that plays out, you can trade the asset on major centralized exchanges like Binance and Coinbase, or swap it natively on VSwap. Let us know where you think the price is heading. Drop your targets and your bullish or bearish stances in the comments below, and make sure to like and subscribe for more deep dives. The project is executing its technological roadmap exactly as promised. The gamble isn't whether VeChain works, it is whether the broader crypto market will ever actually care about utility.